Hello, welcome back to the channel. After so long, I'm glad to be back with the My Take series, and I hope you guys like that. So we'll be talking for the next few episodes about digitalization, which is a topic that has been trending, I think, for the last 5 to 10 years or maybe even more. And as usual, I will talk about different industries, which are basically the industries that I normally see on a daily basis at Wonderflow, and I would highlight how companies in the different industries that we'll be talking about are digitizing or have been digitizing for the last years. As usual, I have some interesting information here on my computer that I saved for you. I also have my iconic notebook where I write down all the interesting things that I want to talk about. So let's get started. So as I said, with Wonderflow we see a lot of companies in different industries, and we realize that there are certain industries that are more prone to being digitized, or where they started this digitalization many years ago, and some others that still haven't. So in this series of My Take, we will talk about the top 5 industries that need to digitize today, because otherwise they will be completely disrupted in the next few years. So we will make 5 different videos in which I will talk about specific industries. In each video we'll explain what, in my opinion, based on my experience, are the opportunities and the risks of digitizing or not. A good example to start this first episode is to talk about one industry that has been trying to digitize itself for some years now, and it's probably now at a moment where this will really happen, and I will explain why. But just to give you an idea, a comparison and trying to understand industries that have been digitizing in a different way, we can think, for example, about consumer electronics. Consumer electronics products have been sold online for at least 20-25 years already. If you think about Amazon or eBay, that are both over 20 years old, you understand that it's at least 20 years that there is some sort of competition online to sell online. And more people have been buying increasingly every year consumer electronics products on the internet. Therefore, digitalization became essential to survive, to stay alive, and to grow your business. And this is a process that started 20 years ago. That's why the very vast majority of consumer electronics companies are now digitized. And they went basically through the digital transformation process that other industries, like for example the one that we are talking about today, which is financial services, are instead starting right now, or have been struggling for the last 2 years to execute. For the financial services industry, and I'm talking mainly about banking today, but also insurance, it is let's say part of this macro industry. So banks, the way we know them, they are absolutely the opposite of being fully digital. But there is a trend that has started, I would say around 5 years ago, that has pushed even the larger brands to going through digital transformation at a faster pace. What does it mean to become a digital bank from traditional bank? Well, it means that all the services that normally the bank would offer offline or in store, they would now become available digitally, meaning on your computer, but more importantly on your phone, and we will talk about it during this video. So of course you can think of your bank account, managing your bank account, but this is not just that, it's also apply for loans, for mortgages, pay all kinds of bills, ask for advice, all these services that have been traditionally provided in store now have to move somewhere else on the internet, on your mobile phone ideally. There are some companies that have been pushing the entire industry for a faster digital transformation, and these are digital native banks. To name some, you can think of Revolut, N26, TransferWise, to name some that are quite popular in Europe. And just let's pick Revolut just to make an example. They have been operating since 2015, if I remember correctly, so they are just 5 years old. They already operate in around 30 countries, 32 countries if I remember correctly, and they have, I think to date, 13 million customers and a total of around 5,000 employees. So just roughly every employee manages 2,000 customers, more or less. This number is important because I will get back to this when I compare Revolut to another traditional bank. So as a traditional bank, we can pick UniCredit, for example. UniCredit has 90,000 employees in a similar number of countries, more or less also 30 countries. And they have 26 million customers. So if you divide the number of employees by the number of customers, you realize that you are talking about 280, 300 employees per customer compared to the 2,000 customers per employee of Revolut, of a digital bank. So this number is 7-8 times lower than what a traditional bank needs to manage their customer base. Obviously, so it clearly shows that there are possibilities for very high margins, and the organization itself is more lean. Of course, we need to understand that we're talking about two very different banks. UniCredit is it has a world of services and that are on top of the private banking, which is not happening for the digital banks that we recently mentioned. And also in terms of revenue, there is absolutely no comparison, as UniCredit makes around 28 billion in revenue. Revolut just makes less than 1% of that. It is important to understand how digital structures are more lean and potentially much better performing compared to the traditional banks. And since there is a strong trend of customers wanting to access digital-only banks, or mainly digital banks with a better customer experience, also traditional banks are adapting to that. And they basically, the way they are doing it is in a way that nobody likes. They are just closing their branches and making a lot of people, thousands of people, sometimes redundant. To give you some numbers on that, we mentioned UniCredit, which aims to close 450 branches in the next 3 to 5 years, which equals to more or less 6,000 jobs. Santander, just to name another bank, they realized that in the last few years they had more or less 23% lower less bank transactions and 100% plus digital transactions. And what they did is exactly the same. They more or less are planning to close 20% of their branches, which is more or less 1,200 people. So what we said today is that in just 5 years, digital banks have expanded to the same number of countries as traditional banks. The point is that to expand in all these countries for traditional banks, it took them I don't know, 50 years, and they did it in 5 years, so much faster. They also are getting a good amount of customers that are opening and going for fully digital banking. The total value of the digital banking market is still very low compared to the traditional banking. But things are changing quite quickly, and we need to understand that this is a market where customers are reluctant to switch providers, because switching to another bank account is not as simple as switching your mobile phone operator. So I read a study carried out on the UK market, we're talking about 2019. And in 2019, there were approximately 125 million bank accounts in the UK, and 1 million, more or less, 1 million accounts were switched to another bank. So it's not even 1%. And this type of churn and switching to something else is absolutely not compared to the telecom industry or to other industries. It is quite low, but say this percentage will increase in the next few years thanks to the rise of fintech companies, which are those companies that offer all these other financial services that normally you have in a traditional bank agglomerated all together, and that now you could pair instead with a digital bank. So let's say you get a digital bank account from a native digital bank, and then you attach to it different services, and then the final result is quite comparable to a traditional bank. So when this happens, and when the regulations would allow us to easily switch from one bank to another swiftly, this number would change, but for now is not that big. Why should we care about this 1% per year that changes? Because since it's so difficult to switch from one bank to another, and people are reluctant to do that, once they switch, they would hardly come back. So every 1% that the traditional banks lose, they will hardly get it back. Also, because these natively digital banks, they have built their growth, their trust on the customer service, on the customer experience, which is the area specifically where normal banks have been lagging behind. So it will be very, very difficult for a traditional bank to create the same high quality experience that they would normally get, the customers would normally get with the digital bank. So what should a traditional bank do to limit this damage and try to stop this process of losing customers to digital banks? They should really speed up their digital transformation and creating their own fully digital banks, and this is happening, but it should happen at a faster pace. And more importantly, it is happening, but it should happen that they create digital banks, digital products that are designed around customer needs, because this is what truly digital banks normally do. So how to do that? You have to listen to customers. You need to go where your future customers are and understand what they like and what they don't like. So if you are UniCredit, if you are Santander, if you're a traditional, if you are ING, if you're a traditional bank, you have to go out there and study what customers of Revolut and 26 TransferWise say about their experience, what they like, what they don't like, and based on that you can design a better product. This practice of studying, analyzing, interpreting customer feedback to create better products, it is very common in consumer electronics, as I said earlier in this video, and is very uncommon still in the financial services industry. So if you do that, you can stop this bleeding and you can build a top-notch solution that everyone will like, but you have to do it today. And you have to do it today because becoming digital is already becoming old. It's not going to be the great thing that everyone is expecting you to do. Why? Because 35% of millennials say that they would use only a mobile-only bank. So we're not talking about closing the branches because people don't go there anymore. We're not talking about doing a lot of things with your computer. We are talking about the fact that the branch needs to end up in here with all the services that are connected to it. And it needs to happen now, because the millennials now are 20 years old, and in less than 10 years they would be the most important customers for the bank. I hope you guys found this video interesting. Always happy to discuss more. Leave your comments here and subscribe to the channel, share it with your peers, and see you soon. Ciao.